Ladies and gentlemen, good day and welcome to Relaxo Footwears Q4 FY-2025 results and business update conference call hosted by Elara Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Prerna Jhunjhunwala from Elara Securities India Private Limited. Thank you, and over to you, ma'am.
Thank you, Yusuf. Good afternoon, everyone. On behalf of Elara Securities, we welcome you all to Q4 and full year FY25 post-results conference call of Relaxo Footwears Limited. Today, we have with us the senior management of the company, including Mr. Ramesh Kumar Dua, Chairman and Managing Director, Mr. Gaurav Kumar Dua, Whole-Time Director, Mr. Sushil Batra, Executive Director and Chief Financial Officer, Mr. Ritesh Dua, Executive Vice President, Finance, and Mr. Ankit Jain, Company Secretary and Compliance Officer. I would now like to hand over the call to Mr. Sushil Batra for opening remarks. Thank you, and over to you, sir.
Thank you, Prerna. Good evening, everyone, and thank you for joining us on our Q4 and FY25 earnings call. We appreciate your continued interest in our company and are pleased to walk you through our financial and operational performance. The earnings release and investor presentation are already available on the stock exchanges and on our website for your reference. Before we move into the question and answer session, I would like to highlight some key performance metrics for Q4 and FY25. Revenue from operations stood at 695 crore in Q4 FY25 as compared to rupees 747 crore in Q4 FY24. The decline was primarily due to softer volume amid a challenging demand environment, particularly in the mid-range footwear segment. EBITDA for the quarter was at rupees 112 crore as compared to rupees 120 crore in the corresponding quarter of the previous year. PAT was at rupees 56 crore with a margin of 8.1% in Q4 FY25. Now, moving to our FY25 performance. In FY25, we recorded a revenue of 2,790 crore. EBITDA was at rupees 382 crore with margin at 13.7%. PAT for FY25 stood at rupees 170 crore with margin at 6.1% as compared to 6.9% in FY24. The company has incurred a capex of rupees 62 crore net of capital subsidy amounting rupees 17 crore till 31st March 25. Our company continues to be net debt-free, and due to working capital efficiency, reported investment of rupees 357 crore as of 31st March 25. We have implemented key initiatives including the Relaxo Parivar app, brand as seller model, and broadening our e-commerce product offering. We are confident that these initiatives will establish a solid foundation for the future. Although some uncertainties persist, we are confident to see an improvement in our performance on top line with EBITDA margin enhancement led by operational efficiency. Thank you. The floor is now open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Vidisha Sheth from Ambit Capital. Please proceed.
Yes, hi. Thank you for the opportunity. My first question was on the top line front. I wanted to understand the volume behavior a bit in depth. While the consumption environment is not favorable at the moment, but beyond these external factors, can you elaborate on if there are any structural challenges that could be impacting volumes, either on the competition side, or you even spoke about restructuring of the distribution model. But can you elaborate that a bit? That's the first question from my side.
Regarding volume, our Hawaii segment was under pressure because, poorer segment, middle income segment, there has been what we experienced. Pressure on demand, maybe these poor people are really struggling more. So as volume gets affected through Hawaii because there are more pairs and less ASP. We covered the sales from other segment, but volume of pressure only because of the Hawaii segment. Last year versus this year, 2% sale of the share was less in our Hawaii segment, which is meant for poorer segment of society.
Just a follow-up to this, this is a segment where we've also taken similar price hikes, to the tune of 7-8%, right? Just wanted to clarify.
No, last year there were no hike. Last year things were stable. There was no hike at all. And it is a very competitive environment also. So we have to be cautious. For profitability, we are working on our back-end operation. So you will notice that our margin structure remains intact throughout the year. Margin structure has been quite good. We have created good cash flow this year. Our efficiency and our utilizing working capital has also improved. So all these things, our cash generation has been quite satisfactory. And our back-end operations are getting more efficient. This year also we are working on it, and our profitability will improve this year also further.
Okay. And can you talk a bit about the restructuring of the distribution model which you touched upon in the press release?
Yeah, the work is going on and we are facing good resistance from a lot of distributors because they don't want to become really fully transparent. The DMS, what we are implementing, a lot of people we are facing resistance, and then we from primary mode of selling, we are focusing on secondary mode. And now this kind of effort company is doing, things are happening slowly, but we are in the right direction. Our foot is down. We are not giving unnecessarily too much credit to bad distributors. Some distributors are closed also. So we are improving the quality of our distributor, quality of credit also given to the distributor. So sale for the year is somewhat affected, but in the years to come, things will be on much better footing because our focus is on improving sale at the distribution, not but retailer level. And that is what is going to really change our complexion of the company itself. It has been a wholesale-driven company, but now it has to be a distribution-led company. We are facing resistance, but we will overcome. Things are happening and it will have. By H1, you will see the difference. We are setting right our e-commerce model also, other things also. But because 75% is our distribution, so our focus remains there much more.
Understood. That's all from me.
Thank you. Next question is from the line of Shraddha Kapadia from Smith. Please go ahead. Shraddha, your line is unmuted. Please go ahead with your question.
Hello, am I audible?
Yes, please proceed.
Yeah, so sir, I just wanted to understand that our gross margin has been impacted. If you could mention the specific reasons for the same. But our EBITDA margin has remained flat for the quarter. So what exact initiatives which we have taken so as to achieve this? And also if you could provide a bit of guidance for the future, that would be very helpful. Thank you.
Explain margin.
Gross margin, if you see last year versus this year, gross means I think definition this would be aligned. It's a revenue minus cost of goods manufactured. So it has improved 0.7% roughly. It's majorly due to some material advantage and little bit price increase, which we took long back, January 24, not in this financial year. So there is a little improvement and due to product mix and material advantage.
EBITDA remains constant, same last year versus this year. There is not hardly any change. The margin we have been able to protect actually, in spite of loss in sale.
Sir, just to confirm, so the gross profit margin for for your Q4 for this quarter is 54.9. Previously it was 60.3. So there is a reduction of approximately 500 basis points.
You are talking about Q4. Q4, what happened? There was a lot of decrease in the inventory. Yes. Q4, yes, definitely. I was just referring full year. So Q4, it has come down. Reason there is a decrease in inventory. When there is a decrease in inventory, the conversion cost is also there in the inventory part. So due to that, it looks much higher, that cost of goods, but that is not the real case because once inventory decreases, it adversely impacts the margins. It's an accounting entry, not much more than that.
Okay, sir. But if we take a look at the other expenses, then that has reduced very significantly. So do we see that we have reduced advertising spend, or if you could help with the mix of the other expenses, that would be very great.
Other expenses, yes, definitely there is a reduction in advertisement as compared to last year because production levels were also low due to low sale. That is also there because less production, less overhead, other expenses. These are the two major reasons.
Okay, sir. Thank you so much. Can I ask one more question?
Yes, you can ask.
Okay, so if you could just give a percentage, if you have it handy, for the ad spend for the full FY.
Ad spend?
Yes, sir.
How much was ad spend?
3%. It's 3% of the revenue.
3% of the revenue.
Okay, sir. Thank you so much. Also, our Disney and Marvel collection, how is it going?
How much what?
Your voice is not clear. Voice is breaking. Can you repeat the question?
Hello?
Yeah, can you repeat the question? Your voice was breaking.
Yeah, sir. Yeah, sure. The Disney and Marvel collection contribution to the overall sales and how it is perceived by the consumer and what is the response from the consumers? If you could highlight the same.
Yeah,
Disney,
we have just started.
Okay.
Yeah, we just started with Disney and Marvel, and the the figure is quite low. So it's too early to comment anything upon it. So it is only available at our retail outlets.
Okay, sir. Thank you so much. I'll come back in the queue.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and 1. Next question is from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Hi, sir. Just wanted to understand how has been the sales of closed footwear for the company and how has it grown against last year?
Close is also 20% and 80 is our open footwear. Last year also it was same.
Okay, so what we had increased our capacities also in terms of closed footwear. So how do we see that segment moving going ahead?
Still we are setting our e-commerce model because closed footwear is now moving lot of share to e-commerce model. So this year we are focused on it, but still there remains some challenge in the e-commerce because Bass is not proving to be at the moment profitable or efficient. Now we have created special line for e-commerce, which will have some good influence this year. But number of pair overall, if we see, open and ratio remains same.
Okay. And What will be the e-commerce share for us today, as compared to in the past?
You see, we are continuing the same percentage. Last year was 10%, and this year also it is at 10%. 10% of our revenue come from e-commerce.
Okay. And what will be our capacity utilizations today?
55.
Yeah, 55% is our capacity utilization.
Understood. So, we had also started with DMS and, we were reaching approximately 1 lakh retailers in that initiative. Where are we now, and how do we take this, the learnings from there, going forward?
Yes, you're quite right. We have implemented DMS across India to all our distributors. One more thing what we have done is we have launched RPA program, which is called Retailer Parivar app. So in that we have tied up 70,000 outlets. So they have 75,000 have downloaded the app and 60,000 are buying regularly. So this is it's more advanced than the DMS. So we are getting the data how the consumptions are happening across India. So this is a new thing which we have started last year, and in future we'll have our data to understand, what is the consumer requirement at what different part of the country.
How are we using this Relaxo Parivar app to improve our product mix or availability quotient of the stores? Or I'm just trying to understand how are we using the data that we are collecting now.
See, it is just the first year. First year is to collect the data. Second year onwards, then we'll do upselling. The scheme, it is first for the retailers to download and start using it. Once they are into the habit, we'll understand which are the outlets who are giving more sales. So we can target them well, we can take more shelf space, and we can focus there more.
Okay. And is there any incentive? Sorry?
Yes, it has an incentive program. Yes, it has an incentive program. We have given starting from 2% to 7%. So depend upon the buying of the retailer,
Okay. Sir, I'll come back to the question queue. I have few more questions, and we'll have more on this. Thank you. Thank you.
Thank you. Next question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir. Hi. Thanks for the opportunity. Sir, we sort of interacted with the channel, and there were two feedbacks that we picked in our interactions. One is that during the course of FY-25, there were multiple changes in terms of channel commissions, and that too in a very short period of time. So that sort of brought in a lot of uncertainty in terms of distributors as in when to sort of purchase the stock and when not. Second feedback was that obviously it's a very good initiative in terms of the retail app, but there is difficulty in scanning of each and every product to get the sales target commission. And there is feedback that retailers do not scan and the burden sort of only increases with distributors. So I just wanted to check, as you also mentioned, that there is some resistance in terms of adoption of these good policies, but regular change of commissions obviously typically do not gel well with the trade. How are we trying to stabilize such commission rates going ahead?
So talking about commission, we have a fixed commission for our distributors. It is only the scheme which is the add-on, which keeps on changing, seeing the season. For example, if shoe season is there, the more scheme is given on the shoe. In the summers, more scheme is given on the Hawaii category or the open category. So this is nothing new what happened this year. This is every year phenomena. So schemes go up and down slightly, but commission is fixed.
And I understand. Yes, sir.
Yeah, the second thing you're talking about is RPA. It's again, I'm telling you, it's the first year. It's the implementation year. So like 75,000 retailers who have downloaded, 60 are regularly scanning the products. Yes, there is some technical issue in our which we are working upon it. But sooner or later, the habit will be there with the retailer, and they will get the benefit of this.
Got it. Sir, the feedback, obviously, I may not be understanding it properly, but the feedback that we were sort of getting is that MRP minus 35 is there, sometimes it is minus 37, sometimes it is 39. So what kind of a, is this largely because of the incentives or there were some change in the commissions? I wanted to just pick up, so these were the things that we were getting in our feedback.
So we have just launched RPA. So we have started giving directly to the retailer. So yes, there was some resistance from the trade that you are reducing our margin little bit and giving directly to the retailer. So that was little, you can say, not taken well with the distributor in some months, which we have corrected later on.
So now is it like again directly to the retailer or is it via distributors now?
We are doing both. We are doing both, distributor as well as retailer. So RPA is only for retailer and distributor commission is separate with schemes.
Okay, but the tensions and the resistance is more or less largely done with, or we may see some?
It's already done. Yeah, we have done in Q4, yes.
Okay. And sir, now secondly on the demand front, so obviously there is some benefits expected out of the tax relief announced by the government, right? So obviously April was the first month, but any initial signs that you are picking up in terms of how your trade exhibitions went for the upcoming season? So anything that you can sort of indicate which is giving you some confidence on the growth recovery fronts?
Presently, actually things were settling down because our retail app has got accepted. Our trade has been now more secondary. We are going secondary focus. Little bit, this Indo-Pak situation has made the thing little jittery. We have to wait and see how the thing settle down. Otherwise, we are going on our fundamental strong distribution network is settling down. But, because of this retail, this recently what we have experienced in the last fortnight. So, better little bit our consumers and retailers rather, on all north side, because there were a lot of blackout and disturbances in the market. That must have affected some sentiments and demand, but let the thing stabilize, things will be all right.
Got it, sir. That's it from my end. All the best for your upcoming quarters.
Thank you.
Thank you. Next question is from the line of Rakshit Desai from IIFL. Please proceed.
Hi, thanks for taking my question. My first question is on the UK.
Mr. Desai, you're not audible clearly. Please use your handset.
Hi, is it better now?
Yes, please go ahead.
Yeah, my first question was on the UK trade deal. It has opened export opportunities across many sectors, including footwear. So with an extensive manufacturing footprint, are you exploring this as a revenue stream?
Hitesh to this side. We're already in touch with few leads in the UK, but we need to see how we can explore this opportunity, seeing own branded footwear sales or the private label. So we are open with both the ideas and we'll see how the opportunity come and we'll surely track them and capitalize that.
Understood. And my second question was on the outlook on EBITDA margin. With the crude prices correcting, do you see margins inching up even as sales growth remains tepid, or do you see competitive intensity heating up, something that happened last time around?
No, I think this year it will be better because we are working on back-end operation, bringing efficiency. Things should be better than what we saw last year. In spite of competition intensity.
Got it. Thank you. That's all from my side.
Thank you. Next question is from the line of Nipun Sharma from VLS Finance. Please go ahead.
Hello. Am I audible?
Yes, please go ahead.
Yes. For your financial year 25, your revenues were dropped by 4%. So I just wanted to know the reason behind this and your future guidance on the revenues as well as the volume growth? Thank you.
One thing, there were consumer sentiment were muted last whole year. It has been actually happening for the last 1 or 2 years. And second thing, we are focusing on the general trade transformation, which was generally, from primary-led focus, we are putting focus to secondary-led and focusing on retail growth. To some extent, our distributor partners, they have been resisting all this transparency, implementation of DMS, and our retailers have all these things. So that resistance is there. That has affected our this sale also. And then quality of the distributor. A lot of distributor where there were a lot of credits against them. We didn't wanted to give more credits. We wanted to discipline all these our distributors. So all these things, our quality of now distributor has gone up, quality of debtors have gone up, and we have been able to bring down our inventory levels. All this efficiency has brought good. So whenever you bring change of anything, it is always a pain, but it is pain for the short term. But for the long term, it will be going to be a real good gain for the company. That's it.
Okay. And what are the future guidance for the company? Can you please share your future guidance?
The way market is, I don't think the sale will be too high or jump because the general conditions are not good. But as far as we are focusing on profitable, improving the bottom line of the company. We are working on it. But our top line also in H2, what I think, keeping in view all transformation which we are bringing, these things are settling down. Our top line will also grow and our bottom line will also grow.
Okay. Thank you very much.
Thank you. Participants, to ask a question, you may press star and 1. Next follow-up question is from the line of Shraddha Kapadia from Smith. Please go ahead.
Hello. Thank you so much for the opportunity again. So, sir, if you could just give a basic guidance for the CapEx for the next year.
Around 100 crores.
Okay, sir. Thank you so much. And not in terms of only revenue, but if we take a look, then our ASP has been increasing continuously. So do we have any targets for the next 2 or 3 years?
Because there are two things. Because the share of premium article and share of shoe business, that is going up, and our lower price segment like Hawaii, that has gone down. So our average sale price has gone up. And in future also with the launch of more premium article, this will also improve further.
Sure, sir. Thank you so much. Just one last question from my side. So if you could highlight something on the BIS and how is this currently having an impact, especially for small players, and how it will benefit to us? Just touch upon the recent.
No, now as far as we are concerned, we have implemented this QCO, quality control orders, and things are settled down in our organization. As for others whom government has exempted, that is now government's outlook. Yeah, I don't know. Up to now, micro and small, they are exempted.
Yes,
they are
sir.
going to remain or they are going to implement. Government has to decide. As far as we are concerned, our job is over. We are complying with it, and we have nothing to now fear or anything.
Okay, sir. Okay, sir. Thank you so much. And all the best for the future.
Thanks.
Thank you. Participant, if you wish to join the question queue, you may press star and 1 on your touchtone keypad. Next follow-up question is from the line of Prerna Jhunjhunwala from Elara Securities. Please go ahead.
Hello. I just wanted to understand, is there been any impact of the ongoing situation in the country on the sales? Like, how should we take it for this quarter? I mean, what kind of impact should we assess?
So recently, like what we are hearing from the market is some of the markets in North, they were keeping the retail outlets off. So, but now the things have improved. Now the things are from, I think, today onwards, we are seeing that all the outlets are again open. So I think matter of some time, things will come back to normal and we will have a normal quarter.
Okay. And do we look forward to reduce any prices given that raw material prices are coming down?
As of now, we have not seen any major shift in raw material prices. So as soon as there is any change, we'll...
No, there is no change.
There is no change as of now in raw material prices.
Okay, because crude oil prices were coming down, so we thought that there could be a rub-off effect on our key raw materials.
Till now, there is no change in raw material for us.
Okay. And so, in e-commerce, now we understand that there is a lot of competition in the mid-segment, mid-price segment and all. So how are we thinking about product launches? Like how many SKUs do we think are we increasing? And how are we connecting with the younger generation going forward? Any thoughts on the same?
So first of all, we have segregated our portfolio. So we had our general trade portfolio. Now we have specific e-com portfolio. So there was a price war between these two channels, but now we have addressed that. Secondly, we have now started selling through BAS, business as seller. Earlier we were giving directly to the Flipkarts and the Amazon. Now we are not doing through them because they were also undercutting the prices. Regarding portfolio, we have really designed our portfolio according to the consumer need for e-commerce.
Any examples that you could help us understand how consumers are liking or accepting whatever you are selling now? I mean, any initial feedbacks, anything that you can share?
So it's just like, we have to really understand the consumer and design product accordingly. So now the fashion is moving toward more sneakers, So we have really developed our portfolio line to address that category. So we are getting good response.
Okay. And what about the opening price point? Because there's a lot of competition, as you mentioned earlier. So our opening price points were around 700 to 800 rupees. Do we face any major competition that side, or are we gaining some market share over there? How are we seeing our market share in the footwear the closed footwear category, and how are we improving there in the opening price point segment?
So major sales is from 1,000 to 2,000 in e-commerce platform. And yes, you are right. There are a lot of local players who have entered in this price point. So, but we are following our own ways of selling. So we have designed our portfolio accordingly. Gaining the market share is very difficult to get the data of what is the total size of the market and which consumer buying from what competitor. So it's very difficult to share the data with us. Yeah.
Okay. And are we confident of maintaining our margins or improving our margins in FY26?
Yes. We are very optimistic that we will improve our margin here.
So around 100 bits is something that should we look forward to?
Yes, it's workable. Definitely it will be little higher, but that is surely workable, 1% plus.
And this will come from improved mix, or what will be the reason for margin improvement, in your opinion?
We are working on both sides. Definitely one on the high value item product mix, and majorly we are working on the cost side. So we are driving lot of efficiencies in the system, back end and at plant level. We are working on that. So that all will bring at least good margin improvement in the coming times.
And any further improvement possible in the working capital from your end? Do you anything possible over there in terms of inventory reduction or debtor reduction, something?
Yeah, that possibility is there, definitely, but not in a big way because the volume will increase. That's what we are expecting. So overall, from the inventory holding or working capital overall days, it will come down. It will come down.
Working capital, yeah.
50 crore.
Okay. Okay. And anything on the retail strategy? How many EBOs you would like to open this year? And where do we see you in various brands, if at all, any Sparks store or anything that you do planning on the retail side? We would like to get some clarity over there.
This year we are adding 50 more retail outlets, and we are also modernizing retail outlets and few Sparks exclusive outlets also.
Okay. And so you also started with the quick commerce deliveries, right? So any color on that, where the revenue share will be for that segment, or how is it doing?
We are really tied up with all the quick commerce platforms, so it's too early to comment upon that. But we are seeing good sales contribution from that channel. But it's too early to say anything on this.
Okay, maybe we can check with this 6 months later.
Yes.
Yeah.
Correct.
Okay, thank you, sir, and I'll come back to the question queue, Sari. Thank you.
Thank you. Next follow-up question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir. Hi. Thanks for the opportunity again. So we sort of indicated that we may sort of explore the export side of the business, right? So I just wanted to check, one, UK obviously maybe the product is more on a premium side, while in India currently we are at the entry level. So one, wanted to understand that bit. And second, how big can this opportunity become, right? So if any initial outlook that you can provide us from that perspective.
In the export side, we have been exporting largely to African continent and the Far East, Southeast Asia. These have been our major markets, and some part of Central America as well. So, seeing the product file we are having, we have been putting same product line to all these markets, seeing the market potential and the price point what we are working in. So now seeing the latest development of the deals that are happening, yes, we are open to this, and just a few questions back, I replied that we are open for both the option, like our own branded or the private label.
But do you think, sir, there is a market for our products, or we have to change the product strategy for UK?
The market is, we have market for all kind of products in UK. We have seen that the traction is for EVA footwear. We have a good opportunity, and then we have even in flip-flops we have a good opportunity. Besides that, we are exploring opportunity for Sparks, right, like sports shoe. If stuck on shoes, but whatever opportunity we will have, we will surely grab it.
Understood. And is there a component of capex towards this opportunity within that 100 crore that we have sort of talked about? So are we specifically dedicating some of that towards this opportunity, or how should we see that?
We already have good capacities, as you know, that we have a surplus capacity with us. So we will be able to utilize that capacity well. And in fact, we will get the advantage of utilizing that capacity in a better way. And we'll give a benefit on fixed cost, definitely.
Okay, so any indications that you can provide, sir? What is the thought process behind investing another 100 crore? Where, in what segments that is specifically going, since our utilizations are relatively lower as of now?
You know, one thing is certain new articles have to be introduced. So cost of new molds, that is a regular feature around 30 crore every year it has to go there. And then opening of new 50 retail outlets, their capital will go. And then we are also making major capital investment in energy saving devices, like putting solar energy, and then, fuel efficient boilers where we have saved the cost, which will help us in the long run. So these are the investments. And then some of the expenditure is on our in project department, some office expenditure.
And last question, sir. From a distribution perspective, what is our target in terms of addition of distributors and retail outlets for the current year?
See, our target, we have, last time we mentioned that we have reached 70,000 outlets. So we are going to really increase it by 5 to 10% in that front, because what regular buying is happening is around 50 to 60,000 outlets are buying regularly from us. So we have to first take it to 70 and then increase our base.
Okay, so it's more mining of existing outlets. Can we term it that way, rather than addition of new?
Correct.
Also, addition of new distributor. Around 100 we are targeting, adding new distributors in the distribution business.
So if you're not adding outlets, so it will be like division of these 50-60,000 into more distributors for better servicing of those outlets. Is this the way to look at it?
Yes, because we have 4 brands with us. Some brands are weak and some are strong. So we want equal representation of all our brands.
Okay. Last follow-up on this. So is this like, are we also targeting brand-specific distributors, or that's not the case as of now?
No, not yet. We have not. We will see. We will see how things will go.
Got it, sir. Thanks for my questions.
Thank you. Before we take the next question, participants, to ask a question, you may press star and 1. Next question is from the line of Siddhant Gupta from RV Investments. Please proceed.
Good evening, team. Just a small question. When can we expect some improvements in the sales volume, and what could be the drivers behind it?
So we are setting our distribution model, and we are focusing on that. That improvement will help. Then we are focusing on secondary sales, and then opening of new retail shops, around 50 we are doing. And then focus on our modern trade. So all these things will help. You can see uptake H2 onward, because still some distribution which is 75% of our contribution in sale. Here it's taking time to revamp all this distribution setup, which is from primary to secondary. So H2 onward you will see the uptake. Although we may get earlier also, but H2 onward a lot of things will settle down and things will improve.
Okay, sir. Thank you very much.
Thank you. Participants, to ask a question, you may press star and 1. Next follow-up question is from the line of Prerna Chanjanwala from Elara Securities. Please go ahead.
Thank you. So just one last question. Just trying to understand that because you're connected to your Relaxo Parivar app, can we distinguish how much would be secondary sales through this app initiative and how much can be primary sales through distributor-led model? Just trying to understand the effectiveness of this initiative taken.
So it's been just 1 year we have implemented this app, and we are very happy to see that 50% of our sales are being captured there. So we can see the retailers, whoever are scanning, and they're selling the product. So at least 50% is captured. So whatever we're selling to distributor, so 50% of that is being captured in this retail RPA app, Relaxo Parivar app.
This will only improve.
This will improve month on month.
Okay. And what changes you are trying to do in the distributors system? Because I'm just trying to understand that how things can improve radically in terms of distributor acceptance or product acceptance, or what are we trying to change in the distribution system to improve our sales?
So first thing is we have identified the distributor who are not growing or the distributor who are giving a lot of discounts or doing the value erosion. So we are closing them down. Secondly, we are going to appoint huge number of distributors. Like we have, what MD has said that 100 more distributor will be added. Secondly, RPA plus DMS implementation. So a lot of things are going to happen here.
Focus on secondary sales.
Yes, and the mindset shift from primary sale to secondary sales is going to happen, which is taking little time. So a lot of from wholesale to retail mindset takes time. So a lot of small actions we are taking to improve our distributor growth, sales growth.
So, just trying to understand how are you monitoring the growth from them, largely because sales growth will be a function of revenue and the volume and the mix improvement. Price hike is in your hands, but volume and mix improvement. Anything that you are targeting towards mix improvement, because we are at closed footwear at 20% for a long time now. So, how do we really
company is taking control of sales, deploying sale officers. The sale officers are going to the retailers. That is going to help us. What we want to sell, where we want to sell, how much we want to sell. Our control will be more because our people are in the market selling to the retailer. That is the way forward. We have to take the responsibility of selling ourselves in our sales team and less on the distributor.
And plus, we are going to increase our ASP as well. What launches we are doing, our NPDs, is focus upon that to improve our product mix as well. So multiple things are happening to that.
Okay. And what is the price range of sneakers that we have launched?
These are all above 1,000 rupees, 1,000 to 2,000.
1,200 plus.
1,200 plus.
1,200 plus. Okay. And it ends at 2,000 or it goes above 3 to 4,000?
2,500.
Okay. Understood, sir. Thank you so much for detailed response. Really appreciate the same. Thank you.
Thank you. Next question is from the line of Rajiv B. from Nuvama. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. So, with regard to this compliant distributors which you mentioned, so what is the revenue per distributor of this lot currently? On an average?
We can say we have more than 500 distributors. On average, we are doing more than 4 CR per distributor.
You think of the compliant lot, or who have already transitioned to your...
contributing to sales. Total number of distributors with the average sale of 4 crores.
650 was the number which is there in the presentation, if I'm not wrong.
Yeah, but which I'm talking about is the active month on month.
Okay. No, I was asking, there is pushback which is coming from a certain lot of distributors, right? And there are distributors who have already embarked on your DMS journey and okay with their RPA app as well. The contribution of those distributors is larger in the sense per distributor revenue than the average?
Exact number we have to see. What we have noticed is around 10% of our distributors we are facing more challenges in terms of changing their mindset, or who were not growing or cutting a lot of discount in the market. So these are the corrections we have identified, and we are going to replace them with the new distributors.
Sure. Is it safe to assume that the average new distributor would be smaller in quantum in terms of revenue per distributor? Is that same the incremental which you're adding in future?
Depends upon the market. It depends upon the market. Newer market, they will be slower, but in the existing market, they will be a bigger distributor.
Sure. And in Sparks, what is the, let's say, sandals to shoes mix currently?
Total Sparks brand is 40% of the sale.
Right.
50% is shoes, 50% is sandals.
Yeah. So, because if I remember a few years back, I think 22, 21, your shoes used to be 40%, but the ASP has not moved up despite the, let's say, the contribution of shoes portion has gone higher. Any reason why?
No, there are, in this brand, there are three things. One, sandal, second is shoe, and third is our fabricated slippers. So that is also a share, no? Because that has also grown this year, which is in the price range of 400 or something.
400 to 1000.
So that is why you are noticing this thing, average out when it happens.
Sure. And what is the reach of Sparks currently in terms of touch points?
So we have more than 25,000 outlets. Sparks is present.
Okay. And there was a question on gross margin. So I could not understand it clearly. So there is a drop in gross margin, and when I see that the inventory has decreased for the second half, close to, I think, 100 odd crores in the second half. So the channel inventory in general is healthy, or you have pushed something to the channel by rolling out higher discounts, and that will basically affect, let's say, future sales in the next couple of quarters at least?
No, we are watching our secondary sales, which is more important. We can push primary, but rather we are more concerned. We just don't want to push primary sale. We have to watch the quality of the sale. That is for secondary.
But in March there was a pull definitely, because people have to achieve their targets. So that's why this inventory has come down in the month of March. So due to that, margin seems lower side, but that is not the actual case. Overall margins are intact and little better at full level. But in March, because inventory was reduced, FG inventory was reduced in a big way. So that's why it's looking different in this quarter 4.
Sure. That's all from my side. Thanks a lot, sir.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Next question is from the line of Ashish Shah from Business Match. Please go ahead.
Good evening, sir. Thank you for taking my questions. I have 2 questions, both slightly long-term in nature. So if one was to take a 3 to 4 year outlook ahead, do you see meaningful volume growth ahead if one was to look at it slightly long-term rather than the next few quarters?
We are going premiumization. In that case, volume may not be there, but overall growth will happen. We have to see quality of sale, whether we focus more on premium or more on mass article. Since mass articles are under pressure, because the lower segment of the society are going through more pressure and premium articles are getting more accepted, and we will be focusing there. So value sale may be more proportional to the volume sale. That you will see.
Okay, sure. Thanks. And so the second question is on ROCE. Even if growth was to meaningfully improve over the next 2-3 years, do you see ROCE also moving meaningfully higher? And if yes, then what are some of the levers that you have for you to improve ROCE? Or ROCE would remain in this band even if earnings was to improve?
So ROCE will definitely improve when we are working on the cost side. So overall EBIT will improve because EBITDA will improve and everything is going to be improved. So we are expecting it will improve by at least 2 to 3% in coming time.
Okay, sir. Okay, sir. Thank you.
Thank you. Participants, if you wish to join the question queue, you may press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to the management for the closing comments.
So this is all from our side, and we thank you all for joining the call. Looking forward to joining you again. Thank you very much.
Thank you, sir. On behalf of Elara Securities India Private Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.
Thank you.